Good day and welcome to episode 1578, 1578. And since it is Throwback Thursday, I thought I'd give you a throwback picture. Look at all of that extra hair. Who needs all that hair, right? I miss it, I tell you. But yeah, I found that old picture. I've been getting some of my old videos digitized because, hey, I don't have a VCR anymore. You probably don't either. If you do, it's probably very valuable because I hear that nobody's even making them. So there you go. So there you go. So there is a throwback Thursday picture from an interview I did on OCN, Orange County News Channel, and that was Pete Weitzner interviewing me, the anchor person for OCN. What a great guy! He's a professor at Chapman University. Last I checked. But so there you go. Now, an interesting tie-in with this flashback or not Flashback Friday, but Throwback Thursday, we've got it right, is none other than the famous Elon Musk. Now, you know, I don't know why he is so focused on electric cars, going to Mars, whatever he's into, implanting chips in our brains. Forget about all that stuff, Elon. We want you to share the secret of getting our hair back. That would be a real service to humanity. Yes, yes, it would. That would be a great service to humanity. Come on, Elon, share the secret with us. We all want to know. We all want to know. That's the important stuff right there. All right, what's going on in the real estate market? Well, lots of stuff as always. These are interesting times we're living in. If you need us, reach out, jasonhartman.com or 1-800-HARTMAN in the United States. That is a US only phone number. And let's see here. Oh boy, we got some bunch of questions and comments coming in. And I wasn't really planning to take questions and comments because this is just an intro for today's episode of the podcast. But I might just grab a couple of those. Also, I want to make sure all of you know about our Alexa skill. Yes, here it is. You can just say something like this: Alexa, news.
Jason, here's the latest from your flash briefing. In today's briefing from Jason Hartman.
How do we acquire good debt assets, and to what do we attach this good debt? Let's review some of the investments that don't work very well in acquiring good debt assets. Anyway, I won't play the Alexa skill, but you can get it yourself. Just get it on your Alexa device. I can't say that in here because, she's listening. Big Brother is listening at all times. But go ahead and download the Alexa skill in the Amazon app. They have their own app store, right? The Alexa skill store. And just get Jason Hartman's real estate update, flash briefing, and every single day you'll get a little 5 minute or even less episode, if you will, that'll teach you something about debt assets, packaged commodities investing, inflation induced debt destruction, all kinds of things. And I have to tell you, the interesting thing about income property is that it is such a fantastic, stable asset class that many of those Alexa for your Amazon Echo, many of those flash briefings are old. I recorded some of those 10, 11 years ago, maybe, and turned that into the Alexa skill, loaded those in there. And they're so true today. They're true today as they were during the Great Recession, as they were during all the boom times we've had over the past several years. And it just shows to go you that income property is such a wonderful, stable asset class. It really, really is. So make sure you get that. It's 100% free. And then you add the Jason Hartman Alexa skill to your flash briefing. And every day when you say, Alexa, start my day, or Alexa, news, you'll hear that update, and you'll get a lot of good lessons there. A lot of people love that, and we don't talk about it very much, and we should, we really should. So, senior housing. Now, look, there is this trend obviously going on that's been going on for decades in America. It's known as the graying of America, the graying of America, meaning Americans are getting older. In fact, Western populations, sadly, all over the world, aging themselves out of existence. Japan, Russia, Western Europe, United States. Uh, People are just not having kids. And well, say whatever you want about that, but there's a whole UN study called Empty Planet. Well, I don't know if it's the name of the study or the name of the book, I'm not sure. But the idea is that, yes, I know all the Malthusian, people that think the economist Malthus from olden days that talked about how population would ruin the world and scarce resources and all this absolute stupidity. Stupidity, where's my sound effect machine? Illustrate stupidity. Yeah, bad stuff. Malthus was totally wrong because he viewed humans as a cost rather than a resource. Yes, I know humans do tax the environment and they tax resources and so forth, but ultimately they're a resource because they solve the same problems they create and even more. Well, anyway, that was kind of a tangent. Tangent alert, but senior housing occupancy hits a record low. Look, folks, uh, your aging parents, or maybe you, are concerned about being in a institutional setting. Obviously, the fear of COVID, the fear of contagion, all these kind of things. These occupancy levels are down. They do vary dramatically, of course, as the article says, but they are down overall. And one of the six trends that I predicted in my pandemic investing lessons that I talked about last week when we did our pandemic investing Zoom class is the multi generational living trend. Now, this is popular in many, many places around the world, but unpopular in America. And I say it is coming back to the US, where you are going to have multiple generations, three generations, maybe even four, living on the same property. I didn't want to say under the same roof because a lot of them will have guest houses, casitas, whatever, and they'll be living there. But the idea is that multi generational living is making a comeback. That is my prediction. I predicted that back in February. And we'll see. We'll see if that prediction comes true. Most of my predictions are pretty darn good. Yes, sir. There you go. They are pretty good, except the one I'm really wrong on. I've been scary how wrong I've been about interest rates. Sadly, I am not good at predicting interest rates. Who could be? They're so damn manipulated. I mean, these interest rates are totally manipulated. So I couldn't predict them. Nobody could. So yeah, there you go. Okay, but as senior housing declines, there is a boom in workforce housing. Now, isn't it funny how we have these politically correct ways to say so many things nowadays? They used to call it Class C housing. They used to call it slums. They used to call it Class C and D housing. Now they call it workforce housing, which, is great. That's true. It is workforce housing. And I have owned many workforce housing apartment units. Just sold a big one last year for a nice 5 million bucks exactly. That was a pretty nice deal. It was the first time ever that I did not complete my 1031 tax deferred exchange. I did something a little different, talked about it on a podcast episode, and just filed my tax return on that. So I'm hoping that's going to work out okay. I think it is. I'm really pretty pleased with it. So if you want more information on that, reach out jasonhartman.com or 1-800-Hartman if you are in the United States. But look, at the point is here, this article is about apartments, but it doesn't matter. It's any entry level housing. Bread and butter housing is where it is at. And that is going to be a very, very good investment class for many years to come, at least the next decade, if not longer. Because remember, when you are at that entry level of the spectrum, and I don't mean slummy properties, I mean below the median price in any given market. Okay, whatever that market is below the median price, hopefully that's a good linear market, as we teach, as you'll find those markets on our platform at jasonhartman.com/properties. You can find those types of markets and properties there, jasonhartman.com/properties. But look, the point is, if things are good and the economy is going well, you catch people moving out of the parental units home, right? Moving out of their parents' home, moving out, roommates breaking up, and you catch people starting their life and moving up through the socioeconomic ladder. If times are bad, you catch people moving down the socioeconomic ladder, and you can serve them by providing housing and meeting this tremendous demand. The demand for this type of housing has only been increasing as builders have not been supplying that demand at really any level, even worth mentioning, for the past 10 to 12 years. So, very good thing. Go to jasonhartman.com to find out more of that. Now, when we look at the inflationary pressures building up in the market, they are rather astounding. And here we look at August pending home sales. This is the pending home sales index from the National Association of Realtors, otherwise known as NAR, the largest trade lobbying organization on the planet, so far as I know. By the way, if I'm wrong about that, because I sort of keep repeating these things that I learned a long time ago. It could have changed, I suppose, but it's a pretty big trade organization. They do a lot of research. Of course, you got to take everything with a grain of salt because NAR is promoting real estate brokerage, right? So, they're always going to be kind of rah rah. But regardless, the stats are accurate, I'm sure. So we see the pending home sales index, the PHSI, and here are the numbers on this. But here is the growth, okay? And this is the year over year growth. That is nothing short of tremendous, folks. So, broken down by region, you see the Northeast, the Midwest, the South, and the Western United States. So, just one more of many indicators of more asset price inflation. Now, I think there is broad inflation, and that's measured, of course, by the CPI, the Consumer Price Index, which is understated and manipulated. I've talked about that so many times before. Go back and look at my previous work to learn about how the Consumer Price Index is manipulated. Remember the three basic ways: weighting, substitution, and hedonic indexing to manipulate and understate that consumer price index. Remember, the government employees, the government assistance programs are tied and indexed to the inflation index. So there's an obvious reason for the government to understate inflation. Now, let's look at this. When you see this graphically, you see homes selling, and by the way, this is from Zillow. This is a different study, okay? So you see homes selling more quickly at a time of year when sales typically take longer in terms of days on market. Remember, this year, due to the cerveza sickness, otherwise known as, that COVID 1984, due to that, the normal spring selling season this year. That was delayed, it was postponed. And when the lockdown started to lift, when the quarantine started to lift, everybody rushed into the marketplace and probably overstated that bump. But now we're seeing it sort of mellow just a tad, just a tad. And we're seeing still very strong demand as we experience the grapes of wrath 2020. Yes, like the John Steinbeck novel, uh, people are moving. America is on the move. You can't even get a moving truck to move you out of New York or San Francisco because people want to leave those desperate, poorly run, left wing, disastrous places so much. But Look at this here as we break things down, not by location as much as we break it down by the tier in the price. Remember, whenever you hear anybody talk about the housing market or the real estate market, they're they're just talking in sound bites. You've got to peel back the layers of the onion. And so here we see the lowest prices, right? We see this very light blue line on the chart. We've got back to January of 2018 up to July of 2020, and we see sales up and down along those things. But interestingly, in all price categories, they're acting somewhat the same, right? They're not far off in terms of the relationship. But of course, the highest price homes, represented by the darkest of the lines, are taking the longest to sell. But even when you look at that, it's not very long at all. I mean, let's just go across this graph. It's just over 30 days to sell a high end home in America in all regions. And then you take the low end properties, and those are selling in about 15 days, give or take, depending on where they're located and exactly what part lowest, low, middle, highest price range. So all price ranges selling very, very briskly right now. And here, I mean, look at this. This is again the Zillow study. It says the typical US home in just 16 days in September, or that's how long it took. Sold in just 16 days, down from a whopping 17 days in August. Oh my God! But 28 days a year before. Okay, so just lickety split. I mean, things are selling so fast. It's absolutely crazy what's going on. All right, let's see. You know what? We might as well grab a couple comments and put the let's put the Elon Musk. Look at all that hair he got back. Who did Elon Musk go to see? I need the name because I'm going to need that soon. All right, planning ahead, but I'll put the Throwback Thursday picture up there as I take a couple of these questions. Then I've got to jump to part two of today's show. So Kevin says, "What's up, man? Hey, what's up, Kevin? How you doing? Glad to get time before you blow up in popularity." Hey, thanks. Hey, we just passed 10,000 subscribers on the YouTube channel. So thank you, all subscribers out there. And if you're not subscribed to my YouTube channel yet, my humble little channel just passed 10,000 subscribers. I've never really focused on YouTube. I've always been more interested in podcasting, but now we're trying to make more video content. And that's what we're doing right now for you. What was that question? Sorry. So Kevin says, thought on housing market near if I can talk, Midwest universities. Hey, Kevin, I got to tell you, and everybody, you better listen to this carefully. I think that the situation we're in right now with the pandemic has disrupted, thankfully, so many things that were bad needed to be creatively destroyed. If you follow my work, my favorite economist is Joseph Schumpeter, and he was the one that promulgated the idea of creative destruction, saying that capitalism destroys things in a positive, creative way. And one of the things that's long overdue for disruption, creative destruction, whatever you want to call it, is the university government debt enslavement complex. Why do I say government? Because the government created the problem by insuring student loans through Sallie Mae back in the 1970s. And what happened? Well, a tidal wave of money started flowing in to these pathetic rip-off colleges and universities, where you used to be able to work a part-time job and pay for your upper level education. Nobody could do that anymore. Now you would have to get a loan. Why should you have to get a loan to go to college? That's absolutely absurd. The price of college should drop to the market price that's reasonable, that people could pay working a part-time job while going to school. And if 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 COVID really disrupts that. And I think it is disrupting it because now we're seeing the backlash. Look at the social justice warrior scumbags at Harvard University. They did not lower their tuition price at all when they announced that all classes would be online. I mean, think about how absurd that is. Technology has created so many inexpensive things for people. It has reduced the price. It is a deflationary force in so many ways, except it has yet to disrupt the college, university, government debt enslavement complex, which it needs to disrupt. And I think people have wised up. Thankfully, I think COVID has wised them up. Why should you pay $48,000 to sit in front of a laptop screen and get your education, even if it has the Harvard brand on it? It's ridiculous. Technology is infinitely scalable. So that means you could literally pick the best professor in every topic taught at a university. And that one professor could teach every college student on planet Earth. And the cost of that class could be $1. You can tell this is an epic scam when they are just ripping people off. Not that I'm exactly on a rant about that or anything, but what does that have to do with Kevin's question? Well, it has a lot to do with it because college towns have typically had overpriced real estate. Why? Because colleges, number one, have turned into hedge funds. I mean, it's absolutely ridiculous. In any college town, the biggest real estate investor, the biggest landowner is the college. I thought the point was to teach education, to educate people, not to be a real estate investment trust, not to be a hedge fund, not to be a branding agency and a sports marketing company and force your college students to rent dorms from you. Talk about antitrust restraint of trade. After they get done breaking up Google under this antitrust lawsuit, thank you, Justice Department, good job. Finally, they are, or Department of Justice, whatever, DOJ, for suing Google and Apple. Shame on both of these companies, right? So hopefully we'll get some justice there. But next, the universities. I mean, that's what's called in antitrust law. It's called a tying arrangement, where you say, okay, if you want to go to my overpriced college, you're now required to stay in my overpriced rentals, my overpriced housing, my overpriced student housing. And this is just a total scam. So look at, I would wait for any college, like the student housing investment has been really hot for many years, but I would wait to see that get disrupted. Let it get disrupted and let the price come down, and then let's talk about investing in those markets. Okay, so not yet, Kevin. We'll see. Okay, another Kevin. Okay, says Musk is a hypocrite. He takes government subsidies and decries socialism. Yes, I agree. He is a hypocrite. But look at, everybody's a hypocrite when it comes to their own money. That's just, you just have to expect that. Yes, Musk is a hypocrite. I agree. But whatever. Listen, I just want him to tell me how he fixed his hair. That's what I want to know. And Carrie says, great photo. Hey, thanks, Carrie. Yeah, I miss all that extra hair I used to have. Okay, so where do you see multifamily market going? Well, hey, I think multifamily workforce housing that is the garden style housing, meaning it's usually maybe 2 stories, where someone doesn't need to get in an elevator, where it's not really, really high density. I think that's okay. But if the elevator is the danger zone, just know that. The two big danger zones, in my opinion, for any concern about contagion or civil unrest, these tend to go right together, they track together, are elevators and mass transit. Okay, elevators and mass transit are the danger zones, right? Because you can't socially distance on them. And you're also tend to be in areas that are prone to riots by Joe Biden voters, because riots are essentially the biggest Joe Biden campaign rally in history. Okay. Uh, do you get it? Do you get that joke? Well, sadly, it's not really a joke. But anyway, I hope you get it. But the multifamily market for garden style apartments, I think, is okay. But you don't want to be in the urban core because any urban areas are really susceptible to, obviously, to contagion concerns, and they're also very susceptible to civil unrest. So all of that is bad. Okay, you must know Foxconn. Well, yeah, I know about Foxconn, the manufacturer for Apple in China. Sure, what about them? But yes, I certainly am familiar with Foxconn and the slave labor that Apple employs to make our phones. Yes, see, and we're all kind of hypocrites because look, we buy them. Okay, so and hello from Bend, Oregon, Omar. Yes, hello to you too. All right, hey, without further ado, let's get to part two of today's episode. Adam is back with us. Adam is one of our team members, and we are going to play the interview I did with him on the live stream where we talk about a bunch of, or not on the live stream, sorry, on the podcast. So part two will not be on the live stream, but it will be on the podcast today with Adam. So just look up the Creating Wealth podcast and you can join us for that there. But on social media and YouTube, thank you so much for joining me for the live stream. And thank you for the comments. And until next time, happy investing.